Good afternoon, everybody. It's Sunday afternoon, 11th of July. This is another edition of the Plus3 Stock and Commodity Forecast. My name is Ben Maldonado. I'm here with, as always, with Barry Heteraki. Hey, Barry, how you doing?
Pretty good, pretty good. We're on a Sunday for once.
That's right. We're trying to get ahead of the game here. But the one of the key announcements we wanted to make was we've started a YouTube channel. And we are posting these videos weekly. So if you want to get notification of when the new videos come out, and I think you should, because we're going to be doing this not only weekly, but sometimes during the week, we're going to pop a video out if something happens, or some sort of background videos on our approach and the methodology we use. If you want to get notifications of those things and know when they're out there, obviously you'll get the Twitter feed, but if you subscribe to the channel, you'll automatically get notification when we post new videos. Anything else about the channel, Barry?
Well, no, that sums it up. That's fine. Yeah, if they subscribe, they'll be able to access them as soon as we post. So that's a plus there.
Absolutely. The first thing I wanted to hit on was the Chinese water torture that is Bitcoin has become. It is doing what we described when it started this back in May, which was it's going to frustrate both the bulls and the bears as it continues to chop and wind up in here. Hopefully, if you trade Bitcoin, you've been able to take the advice and sort of sit on the sidelines and let it decide which way it's going to go. Interesting thing, it keeps holding this support for the last 2-3 weeks, which is kind of a bullish sign. As long as we hold that, there's hope that it's going to break out to the upside. But the chop continues, so caveat emptor there. Anything else you have on Bitcoin, Barry?
Well, like we touched on it last week, long as we're stuck in the compression here, let it be.
Yeah. Let it be and avoid the death by 1,000 cuts.
Exactly.
Let's get to our things are moving in the markets now. We got a lot of stuff to cover, and we want to keep these videos short and to the point and highlight the markets that we see moving. So, Barry, I'm going to throw it over to you and have you do your review, and then we'll come back and hit some commodities. There's the wedge.
The never ending.
Right.
Well, we'll see. It's going to be interesting. All right, just to catch up from last week. Well, another thing, now that we're doing these on a regular basis, it's good for you guys to, always catch the previous post. So, so they're up to date on where we are, because we sort of unfold this like a story. And speaking of stories, so.
What's the story here?
Story here is, well, look, starting from last year off the low in March, we've been bullish because the trend's been fairly strong and there's really nothing, nowhere else to go. And one of the things about these squares that we use and the levels that we use, and we'll do a short intro video into how we look at these things, so it's easier for you guys to follow. In the meantime, just to say that the times we really talk about potential turns and active times is when prices are close to one of the main square levels. So here it's a 90, this is a square of 90, so it's 90. We have a 180 over here that was up in last November, December. And now we're at 270, and here we are in July. So these levels and the half squares are key levels that we talk about. Once we get past them, all the focus is really basically on trading in that direction till we reach the next target. And for ease of use, we just use these targets as support and resistance, or levels rather, as support and resistance, and also targets. So that being said, we're up 270 degrees from the low last year. So this is a resistance area, a key resistance area, and stronger than these half squares. So the idea is we're waiting to see if the market will settle above it or if it's going to back off and consolidate or correct. And the level that we're watching is right around 43.50. Okay, these aren't exactly black and white, it's a zone, right? Give it a couple of points, but roughly I would say 43.50 is the level we're watching. And what we want to see is on a shorter time frames that we settle above this, meaning pullbacks will settle above that level, and that would tell us, just looking at the price action that and the structure, that it's settled. That's a level that's holding, and then we'll look on for it to trade higher to the next level. For now, because of the timing on the timing side and the cycles that we're working with, the next target we're looking at around 44.40. Okay, 44.40. And that's if we can hold above 43.50. And that's a decent run there. And the close on Friday was fairly impressive. So, Monday, Tuesday, we're looking to make sure that 43.50 is held. And this, seeming break is for real, because these are the areas that markets also do false breaks. So you want to really watch that closely. So I would say this is sort of a decision point for the market, and we're just waiting to see which way it's going to hold and trade accordingly.
And Barry, one of the things that we always talk about too, as a part of our methodology, is cycles. And does it make a difference to you? I want you to explain to them if you hit that line and there's cycle changes going on versus hitting that line when there's no major cycle changes.
Mm-hmm. Well, exactly. And that's why I think, since we do have cycle changes happening, you really have to watch and make sure that it can settle above or not. Mm-hmm. And so I would say when you have cycles expiring at these levels, you have to be a little bit extra cautious, I guess. And right. You always have to be cautious when you're coming up on these big levels. But with cycles, yeah, you really want to see the price action afterwards, after we tap those. So yeah. And let me take a quick look at the weekly. We've gotten a habit of looking at the weeklies after the dailies, so I think it's a good thing to do. And on the weekly, we're looking at a square 72. We're up almost to 144, 2 squares up, and moving up a very steep line.
Mount Everest.
Pretty much. And so we've been talking about this for a couple of months and saying how they don't really last and can't continue, but this market's really doing a good job. And long as it's above, there's nothing much to do other than to trade with the trend. And just on the bird's eye view, if we do the 144, not that we have to get up to the square to stop anything, it can happen anywhere, but just to get a bird's eye view, we're good till almost 45. That's really where this comes up to. You can see the green number over here on the side. So 45 is potentially where we could go if this 43.50 area holds and everything works out. And that would, of course, keep the weekly above the line, the 2x1. So we'll see how it goes. For now, yeah, we're just following the trend. That's pretty much it. And being a little bit careful when we hit these main level. So we're at a main level. We are climbing a steep incline. So a little bit of caution. But like we said, we have these levels. We know what to watch. So 43.50 is the key level to watch for next week. Let's move on to the bonds. Another really interesting play. So ever since, I don't know, April, May, we've been talking about the lowest possibility being in place, and the fact that, it would have to hold about this 144 square down from the high to prove that it's not that weak. And sure enough, it held it fairly well. And then this purple line, we added that a few weeks ago, being it's from the weekly charts.
From the weekly, yeah.
Yes, and any breakout we were waiting to see if we can break out and hold above in order to, and the market doing that would show us some strength. And a couple of weeks ago, it did that. We broke out, came back, tested it, and this was a go. We talked about it being bullish from here, and we showed the target being around, this 164 area, and the market went exactly from the pullback test to the target, and a quick reversal. So is it all over at this point? Well, not so fast. I would say a couple of things to watch in bonds. Main thing is if we can hold above 162, I think the market is very bullish. I think that's a key level and a key indicator of how strong it is. If we don't hold above it and we break this trend line, which you guys can duplicate on your charts, then I would say we're really, if we break this at this point next week, let's say, I think we're going lower to test the lower levels, probably in this 159 and a half or so. And it's time to take a breather, and it's probably just going to, be not that clean. But if we hold above it, above this 162 level, I would say it's in a very strong position and can probably go take out this high on the next run. So the key level we're watching is this 162, right? If we can hold above it or not, along with this trend line. On a weekly basis, take a look at so the square of 52 coming off the high is that level, the purple line that you guys saw on the daily. And we're clearly well above it. And there's an entire weekly bar that made air above it. So we're in good shape. There's a weekly trend line to watch. So generally speaking, this is kind of a sloppy uptrend. It's okay. And use your short-term entries and whatnot to trade in that direction. Okay, is that okay? Ben, did I cover everything there?
Yeah, no, that's good. I have a quick look at bonds, which while the trend is still bullish, I think we had a failure last week, and I'll show you on the chart.
Yeah, okay. And next, let's take a look at our favorite. Take a look at crude. Well, we've been talking about the next target being 144 up around $79, and not quite there. So we continue to be bullish, and we'll see how it goes.
Yeah, I think crude, anything above 70 is bullish, and above 75 is really bullish.
Mm-hmm. And like the S&P, which is doing a very steep angle here, crude is basically climbing a 1-by-1 healthy bull trend.
Mm-hmm.
And long as we're above that, you have to side with the bulls and stay with the trend and trade in that direction.
Mm-hmm.
Now, once we hit the 140 or 179, 178, we'll see what we can do there. But for now, it's bullish and not much else to talk about.
Agreed.
Next, we have gold. Well, we've been talking about it coming off this low. Last few weeks, we talked about the break coming back to support, tested support right along this 1750 area. We had this line dropped in, and if that held, we were looking for a retest of the half the square, which is around 1857.60. And for now, that's what we're looking for. That's what I'm looking for. And so I think the pullback is done for now, which it was after we tested this, and now it's basically consolidating at a key level meaning an eighth division of the square. So the way it looks like we could go higher and test. So the next upside target is around 1860. 1859, 1860.
And I think, Barry, gold is a good example of what all the tools that we use, what we try to do, which is we're trying to isolate and find, you know, higher lows or lower highs on that first pullback to be able to catch that big wave up.
Mm-hmm.
And I think there's a potential there in gold. There's a, you know, and 3 or 4 other commodities that I'll review with the same sort of thing. They've been consolidating or correcting. We're either putting in a higher low or we've put in a higher low. And that gets my attention because if you catch it right, then you can catch the strongest wave in the advance or decline of a commodity.
Exactly. So gold, that's the take. Let's take a look at the weekly. Same story. We're coming off of, we're using a 52-degree square, and we did the 52 square on the pullback on the correction off the high, rallied up to the 50 and failed, and we held at the quarter. So again, you know, this feels like a sort of a bullish consolidation, right?
Mm-hmm.
Otherwise, it would have sold off and taken out the 52 and be done with it.
Mm-hmm.
So for now, I feel like it should be trading between sort of 1760 and 1883, this bracket.
Mm-hmm.
And so we can mark that off and watch what happens. So within the bracket, it might, you know, we're not exactly we haven't taken off in a strong bull market on the weekly yet. You know, we pulled back. So let's see how the next week goes, and just stay focused on the daily, which is also moving higher. And until we get to the half square, there's really not much to do other than to trade in that direction. Take a look at dollar. The blue line around 91.5 is 91.40 is from the weekly charts. And we've been, if you look at the other videos, you know, past couple of months, we've been bullish on the dollar ever since this low came in. And we were watching the weekly 91 level to see the strength of the dollar and to be long the dollar after we break out. And we were looking for a pullback, which we got the correction. And now it's it made the second leg up and correcting. So I'm guessing we're going to probably come back and test that 91 area. So let's just back off and wait for that to happen. And a critical test is around this 91. Can we stay above it, or are we going to break through and go down and test this trend line? Let's take a look at the weekly. Weekly is the euro. All right. Let's take a look at the euro. So we had the pretty much 72 low to low. And I think last week we talked about how the euro could go down and test this low, the old low from March. And the level down there was around 170. Didn't quite get there because I think this support line, hope you guys can see that. I think this line is fairly critical. This is coming out of geometry, and I think it's a good line. It held it there. And because of that, I think a counter trend can be expected. Let's just put it that way. And possibly a test of this 2053 area. Again, this is not in a, huge trending section. So being a little cautious here, and we have to take a little bite at a time. So
to your point also, Barry, the euro last week on a day where the dollar was really strong against everything, the euro was up. And that's always a tell that, there's something going on there. So I think you're onto something.
That's a good point. So looking at the geometry, I would say long as his low holds from last week's low holds, we ought to watch because there's upside. There's really not a lot of resistance up until we get up into this area.
And what's your half square there?
Half square is around 2053.
Mm-hmm.
So that's it for the euro. On the weekly, that's the daily. So looking at the weekly, well, as long as we're above the old low, I think we're in decent shape. We have a fork here to use as general, to look at the general balance. And so, yeah, I think long as it's there above it, we ought to probably give it the, there we go. Okay, and we're well above the 50% line on the square of 90. We did go up and tap almost to the 90 square at the high.
Mm-hmm.
So it's expected that we have some kind of consolidation. And the fact that we really didn't come down and touch the half square tells me that it's stronger. It's stronger than we thought.
Mm-hmm. Good point.
And I think it's probably going to go a little higher from here.
Excellent.
Yeah, I think that covered the basics.
Sure does. You hit the major markets. Yep. Let's look at some of the commodities that caught my eye this week, in addition to other markets that people should have a look at. So right. Barry gave a quick review of the 30-year Treasury. Here's the 30-year Treasury daily. And I just want to point out what I think is a pretty significant failure on my daily here. We busted up, got above, even closed on a daily bar above this geometric support and resistance right here. And then the next day plunged right through it, right back through it. While it's not a classic definition of a false break, it sure acted like one. So I'm going to be watching bonds closely this week to see if there's any follow through to the downside, or if we just kind of go sideways along this level. But it could be setting up for substantial weakness in bonds if this was actually a false break. Yeah. So that's something that's on the radar. Mm-hmm. Let's go look at crude. A couple of things I wanted to show in crude. So here's your daily on crude. Last week we were, chugging along, making new highs, and then bam, they hit this thing super hard, like in 2 days, really, really sold crude off. But look where the low came in. Mm-hmm. Right where it needed to be bullish, which is right on the square. And we popped right back up when we're going up to the half square here. So the next big area where I want to watch price action on crude is this 75 area. We can settle above 75, then we're heading to the 79.80 targets you were talking about. Mm-hmm. But I like seeing, when you have a really strong downtrend. I mean, this was like $8 in crude, right? We went from a high of over 78 back down to about 70, but we stopped right where it should stop if it wants to be bullish.
And look at the pullback before that was the same in May.
Mm-hmm. Yep, right here.
Mm-hmm. And this is why, people should subscribe. So all these levels, they are up to date every week. Watch a couple, the levels we're watching. And when the prices hit that level midweek, they know what to do. So
that's correct. Mm-hmm. Absolutely. So crude is bullish. It looks good. Watch the levels, see how it trades at 75. That'll give you clues on whether, it's going to chop some more or we're starting the next leg up. So that's crude. Here's my recent favorite, which is natural gas. Gas looks really good. And we've been in kind of, you can see this chop in here, which is kind of fourth wave-ish action here on the daily. But again, it's holding this half square. They pushed down below it a few times, but then we go right back above it. So I think gas is just sort of burning off some time, really going up and down, but going nowhere, but burning off time before the next cycle takes it higher. We did a nice it tried to break out here from a previous high. It pulled back sharply and then right back through it. So this is bid. As long as we hold these different levels on a daily, it's 360. On a weekly, it's 367. As long as we can hold in these areas, it's just burning time before the next move up.
Well, that was a textbook breakout trade, eh?
Mm-hmm.
Out of that.
Yep. Very, very nice. So it's acting well. I continue to like gas a lot. Barry talked a little bit about gold. Let's take a look at the view of gold that I have. We've been correcting almost a year now. The thing that I'm looking at is we're battling here at this support resistance line on the full square, which is around 1810. But we're getting these higher lows again on the daily. You had a low here, you had a higher low, you have another higher low here. If this can hold, so I'm watching this, if we pull back, if we can hold here, we're set up to go up in a pretty powerful move. So watching gold because of that, because of the series of higher lows and the setups in place to catch, a third wave type action. Very similar to that, but it's more of a sideways even than gold. Look at how this correction in silver has just been completely sideways. We're starting to get these higher lows. Again, I'm watching to see off of this thrust that we went up, do we get another higher low here? If we do, it should put us up into this 28, 29 area, and then we can challenge this resistance up at the top of the square. So silver and gold have been burning time for a while. I think the rumblings are there, the clues with the higher lows, the more shallow pullbacks. The clues are there that somebody's accumulating, and we may be getting ready for the next leg up soon. Another one that's acting similarly is in the grain complex. They've been correcting for a while. But I wanted to show, no, that's soybeans. I wanted to show corn. That's wheat. Hold on. There's corn. I was talking with Barry about this chart earlier today, and it's kind of textbook, right? We went up, made a high on a full square, failed, came down, lower high, sharp move lower, pull back to the half square, and then look where the low on Friday was, right on a full square. The correction may not be over, but the odds favor that corn is set to move higher. As long as we can hold this full square, corn should get a nice move up. We get a pullback, and then the big moves coming. So corn is squarely on the radar right now. Wheat and soybeans, I think, still have another push lower, a little more work to do. But corn may be leading the grain complex on the next move up. You got any thoughts about corn, Barry?
No, it looks good. I think that's the level to watch. It might go a little lower, but not much. When I say little, I'm talking few ticks.
Mm-hmm.
But the level looks good. Timing looks good. So let's watch it.
Yeah, we always have to be aware of the false break and the pushing it a little further to shake out any of the people who don't have conviction. But that's certainly possible. That we've seen the low in the correction for corn, and bullish positioning is going to be very favorable over time.
And the fact that we're holding so well above last year's prices. So
Yep.
Mm-hmm.
Here's another one, another commodity that's been correcting for a while, but I think looks like it's setting up for a big move, and that's sugar. Sugar had a nice move off the lows last spring, the COVID lows, good move up. We've been going sideways for 2.5, 3 months now. Couldn't even get down to an ABCD low, made a new high, couldn't hold it at the half square, but this pullback again came right onto the square. As long as we can hold this level, which is roughly 1720, 1725, sugar could be set for the next move higher. It's a common pattern we see in these commodities, is that they're able to hold above the previous highs from a push earlier in this year or late last year. And when something does that, it's a very bullish sign. Even, not counting all the macro trends and everything else that's in there. Here's another one that's really interesting to me, because it's been coiling up for 4 or 5 months now, and that's cotton. Cotton made a strong push higher out of the lows last year, sharp pullback, and we've been winding up in this triangle for a good part of 5-6 months now. The thing that I like is we've got the higher lows, but we also last week made a higher high, and that's the first one in a while, because we were making a series of lower highs. And last week we poked up and made a new high, couldn't hold it. But this looks like it's just winding up, building up energy for a breakout higher.
It's another one of those levels, if it can hold above, it's probably going to go and challenge the highs.
Right. So those are the commodities that I'm looking at and very interested in. A lot of them have been correcting. The corn, gold, silver, they've been correcting for a while now, and I think it's time to pay attention. Use your tools to get in, but watch these levels, because they're starting to signal that the corrections could be coming to an end shortly. Anything else you got overall, Barry, where your focus is this week before we wrap it up?
No, I think that's a good wrap. We covered everything. Well, we might do a midweek update, so we'll see how it goes.
Yeah, with the cycles kicking things into gear, it's really, really important to keep your eyes on the markets that are set up. And that's what we're trying to do, is give you a heads up on the markets that are setting up or are in a position where we're getting a trending market. Watch your levels and trade off the level when you got a favorable risk reward. That's the game plan.
Yep.
Have a great week, everybody. And if we don't talk to you the middle of this week in another video, we'll talk with you next Sunday.
Great. Thanks, Ben.
All right. Take care, Barry.
All right. Have a great week, everybody.